Hey everyone, hope you're doing well. I wanted to make a video today kind of on the effects of the market. Basically, I touched on a video recently about not the Health Care Act, sorry, the American Health Care Act, which is the Trump version of the Health Care Act, which failed to pass in Congress. And the effect of it was that the stock market, which was on a what I guess you could say like the mainstream economists you'll see on TV like CNBC, Bloomberg, and all that say like it was on a tear. Like ever since the election, the stock market's been roaring upwards. But as soon as that healthcare failed, which was a big promise that was being made during the election, the stock market kind of started cooling down a little bit, and a lot of people, a lot of big investors are questioning whether Trump could get some of these deals done that he was talking about, and that's affected me a little bit on some of my buy and hold portfolio setups, like my Stash and my Loyal 3. Since healthcare is still the issue of concern, my Live Long and Prosper is still up, still getting plenty of play in the market. And then my performance of it for this year has still been pretty good. But some of my other ones have kind of been going up and down a little bit. Like Internet Titans went down a little bit, Defending America went down, and Raw Earth, Money Machines, and Wireless Wonders are in the negative. Now, you see on these first three, I have $90 invested, and these bottom three, I have 105 invested. I kind of said in a previous video that whenever these ETFs go negative, I'm gonna add some more money to it. And I'm just gonna add like $5 or $10 at a time. I just moved recently, so I'm not trying to throw out too much money into these investments. But basically, I'm buying the dip. So I just recently added to Money Machines today, which is let's see what this ETF is, VFH. So if we look at it on Robinhood, just to see a quick graph, I basically hit this kind of wall right here where it was up high for a little bit and then it dropped down and it kind of came in a lower rate into negative territory. So what I did is I just threw $10 on that. So basically, whenever there's this dips like this, like you see, I was riding up here, I wasn't adding nothing to it, and then as soon as it dipped down right here, I added some money. So I kind of got in at a lower price. And then same thing when it was around this level, I was adding a few dollars to it. But since the whole failure of that healthcare bill, I've noticed that there's been that issue, and I'm concerned in a sense because the next thing I know he wanted to tackle was tax reform, and a few other promises. Now, of course, if you do keep up on the news, you kind of see his demeanor overall is changing a little bit. Is being a little more distant than usual. And all that plays in the market because Trump is the economist president, you could say. Like his whole thing is he wants to be judged on how well the stock market does, and that's how he looks at business. He's a businessman. Well, right now the stock market went kind of sideways and kind of cooled down, so he's probably not in the best of moods. And when you're making these deals, I'm not saying like good or bad from like a social perspective. I'm just saying from a financial perspective, it's not looking good. I of course didn't want that healthcare bill to go through because it was further cutting in to kind of like the 99% of the population that can't afford expensive healthcare. So I'm happy that it didn't go through, but I'm not happy that it kind of hit my financial situation a little bit. But like, I mean, overall, I'm up in my account, so like, I'm not like saying it's the worst thing in the world or anything like that. And when I picked these ETFs, I did pick them for a 4 year or his 4 year term, unless of course he gets impeached or something. But the next 4 years, I basically am going to hold on to these ETFs and just slowly add to them over time. And like I said, whenever they dip negative, I'm going to add more. So right now, these first three are in the positive. They're going to stay at $90 till they start going down more. And then once these negative ones start going positive, I'm going to stop contributing to them. And then also, my Loyal 3, I have my 4 here. I'm gonna add to this app as well. There's a couple stocks I want to buy, but my Alphabet, it dipped down, and I added $10 to it. With this app, you have to add at least $10. And for the record, if you don't have this app already, I don't believe you can download it anymore in the App Store. You can still go online though and use the Loyal3 service, and it just gives you about 50 or so stocks to buy, and you don't have to pay trade fees with it. But when you buy and sell, it does a batch order style. So as soon as you hit that buy button, it waits for a bunch of other people who are buying a similar stock, and then they put in the buy order. Same thing when you sell, it waits for a bunch of people who are selling the stock, then it puts in the sell order. That's how they're able to let you buy and sell these stocks for free, and it's also fractional shares. And then my Amazon is up, and I think it's because Amazon, like I said in other videos, it's probably going to be like the first $1 trillion business, and that's not me making that prediction. Like I've seen other people talk about Amazon, other economists, and I'm kind of going off what they say, but I do agree with it. Like Amazon's just, in my opinion, unstoppable. It's already having multiple store chains get shut down because of it, because you just can't compete. But my Google took a hit. So when I first bought the Google the Google stock, I bought it in around here, kind of like in this low dip area, and then it ran up, and then it dipped down. I didn't really keep up with it why it dipped down, so I can't really comment on what happened. But when it dipped, I threw on another $10, and then it already started coming back again, so I made a little bit of profit from that. And then Amazon, I think there's been some commentary on foreign markets that they're expanding into, and I think that's what's kind of driving up this right now. But I'm not gonna add more to this until this cools off, because if you look at it, like I bought originally like down in here, this little dip area, and then it was going sideways for a while, so I was just leaving it alone, and then it just shot up right here. So obviously I'm happy because my stock's going up, but like I'm not gonna add more to it. I'm gonna wait for those moments. But two stocks I'm looking forward to getting in the near future with Loyal3 is Facebook and Microsoft. And I've talked about Facebook on several occasions. Like, I always say they have like close to 2 billion users. All their accounts are monetized. They have the WhatsApp. They have, other services or other acquisitions that they bought that are successful, like, Instagram. I foresee, and they're basically a big monopoly on the whole social media market. You could make arguments about Twitter and Snapchat and all that, but they can't compete with Facebook. It's just too monstrous of a company, and they have over a $400 billion market cap. It's just too huge to stop. But that's one reason why I want to buy into it. But I'm waiting for a dip. I missed my opportunity here. I did buy this dip, these 3 dips, in my IRA account, but I'm not going to show that in these videos. I want to stick with just the trading. But I'm basically waiting for another dip down before I buy into it. So I'm just letting this ride up. I'm letting it just get to that point, and then at some point it's going to run out of steam and drop down, and that's when I'm going to get in on it. And then another company I want to buy is Microsoft, and the reason why I want to buy Microsoft is because it's basically not the only platform, but like the most popular platform, the most well-known platform, the most used platform as far as anything related to using computer software. If you're going on the internet, if you're downloading, if you're playing games, if you're doing work, especially if you're doing work, because Microsoft Office, Word, Excel, PowerPoint, all those things. Microsoft is not really an innovator in terms of creating new things, but they do buy up companies and services, and they brand it well with their name, and they basically collect rent, you could say, or royalties. Whenever these companies are making money, Microsoft's making money, and Microsoft, like, every year makes several $1 billion every year consistently. Like, you look at their quarterly earnings here. They're like, you had Q1 2016, which was a little bit less, but like generally you'll see like Q2, 3, and 4 like this. They'll always be beating on earnings. They're always going to continue to grow. But unfortunately, Microsoft is also kind of on a run up upwards. There was a small dip here, but I wasn't thinking thinking of this stock at the time, so I missed that. So I'm gonna wait for another dip down. I'm not gonna buy it right now, but if you look at it like on this 5-year chart, you can see what I'm talking about. It's continually just continuing upward. I'm gonna wait for dips like these basically to buy some shares of it. But until then, I'm just gonna have to wait. But one thing I would recommend to anybody looking to invest right now, because there is this little bit of a cool off period with stocks, like I said, just because the healthcare bill kind of got snubbed, and big investors, not small investors like you and me or whoever's watching this video, but like big investors like big banks and stuff like that, they're a little more concerned. They're a little more um, taking caution with their investments. That's ultimately what's pulling back the market a little bit. I'm not saying the market's going down. I'm not saying it's stagnating or anything like that. It's just like it kind of hit a cool off. It had a good run up since the election. It was going up pretty good, and it just kind of hit this little break at the moment, just because of that bill did not pass. Now, if the next major thing Trump pushes through passes, I could easily see the stock market continue going back up. But if the next that major bill he tries to pass fails again, it could be an issue where it kind of makes the stock market go flat or even down a little bit, because the ultimate or ultimately the investor sentiment will go down, and that's what's gonna make the big companies, the big corporations divest or pull back their money or go into more safe havens like currency or metals or anything like that. But I'm looking forward to that, because that means everything will get a little bit cheaper. Then I'll start buying more stuff. But that's my perspective on it. But of course, always fact check other people, other content creators, mainstream news outlets, whatever, and make sure you're ultimately making the best decision with your money. But that's kind of what I'm gonna do. But I want to just kind of make an update on that, because I have concerns that I think with the political parties kind of being at each other's throats on certain things, it's causing some discourse in the market. So just kind of be aware of that. But like I said, in the meantime, I'm still going to be investing in these six here. And I have been getting questions about Stash related to certain ETFs that I invest in that other people are not seeing. And when you set up your Stash account initially, it'll ask you some questions, kind of basically relative to your risk, like how much or what kind of investor you are. So that's why certain ETFs in the Discover area here pop up on mine, but they may not pop up on yours. So keep that in mind. You could go into the menu up here, and you could change some settings if you want, and maybe you can get them to repopulate. But I would say do that on your own terms if that's what you want to do. Just because you can't invest in what I'm investing in doesn't mean you can't find something else to invest in. I'm in no way saying my investments are the best investments and I'm gonna win, and all that crap. But if you do want to invest in specifically what I'm investing in, I think that might be the only way to do it. Is you might have to change your questions and answers for basically your risk profile. Loyal3, on the other hand, I don't believe it asked any questions, so you could pretty much have the same browse and buy options here of all these stocks. But other than Microsoft and Facebook, there's like a couple other ones in here that I'm kind of interested in, but mostly Microsoft and Facebook is really what I'm going after. And you could tell already for what I have now, I'm definitely going to be tech heavy, because I already have Google and Amazon as well as Intel in this portfolio. But of these options that I'm given here, I see those as the ones with the most opportunity for accelerated growth. So that's kind of why I'm choosing those. But I'm going to do my best to round it out. I saw a couple other ones in here. I can't think off the top of my head the names. I think like HubSpot was one, and I want to say Netflix is possibly another possibility. Another good tech company. There is a lot more competition with it, because like Amazon does video, and Apple Video, and some other stuff like Hulu and all that. But Netflix seems to be kind of like the the top dog in that kind of market. But it's the same thing though. If you go to a chart of Netflix, you'll see that they're ran up pretty good right now. So they're expensive, at least in my opinion, to buy. If you feel otherwise, of course, by all means. But it's running at 145, and if you look at it on a chart, it's pretty high up there. So I'd probably wait for a dip, something like this in this area. No, obviously it's not going to guarantee it's going to come down this low, but I don't want to pay for it when it's at its all-time high and then the next day it goes down. The whole strategy for my Loyal3 app and my Stash Invest app is to, buy and hold. So I want to buy low, sell high. And I think for the most part, that's kind of just what I wanted to cover today. I did also want to say, I did hit 2,000 subscribers the other day. So of course, thank you for that. This YouTube channel continues to surprise me and excite me because I in no way am a great investor by any means, and I've learned some things, and I was able to pay down like 15 grand of debt. I was able to move out of my old place into a new place, and like I'm making strides in my life to be better, and I'm trying to become a better investor, and I'm glad I could share all this information, whether people view it good or bad, but either way, it's out there for you all to take part in, and if it does help you, that's ultimately what I want to get out of this is the fact that I can help somebody else and make them better, and even if they become better than me, I mean that's even better for me, because I'd feel more accomplished as almost like a teacher in a sense. Like it's I don't know, it's just interesting to me. Like I like the fact that YouTube gives me and other people the opportunity to put out this content, and it's just free to the public, and everybody can benefit from it. So again, thank you all for that, and I hope this channel keeps growing, and I'll keep doing the best I can to get you all as much content as possible, and educate you all as much as I can. And any questions, as always, leave me a comment. Do my best to answer them. And if you like this channel, you want to see it keep going, just help me out, click like and subscribe, and I'll do the best I can for you all. So enjoy the rest of your day.